In this video, traders, we're going to look at what is top-down technical analysis. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. Okay, so our channel sponsor, before we get into this, go and check them out. The links in the description below. They offer trading, CFDs, forex on a vast array of markets, 3 different account types. You can choose the account type that's right for you, depending on how much you trade, your volume, the markets you trade, all that kind of other stuff. And they offer MT4 and MT5 platforms, super popular. Multi-regulated, regulated on different jurisdictions, so depending on where you are in the world, you may well find an umbrella or jurisdiction that works for you. Go and check them out. There's a link in the description below. It's HYCM. Okay, this one, guys, we're talking about technical analysis, top-down technical analysis. So if you are using, let's say we're using MT4 as offered by Ian, and you'd say, okay, I want to look at a trade. I want to decide if this trade is the right trade for me. And the way that top-down technical analysis works is you're almost using a filtering system that's going down through a funnel, if you like. So you're starting off at the top and you're basically saying, okay, how's it looking on my higher time frames? So higher time frames, again, slightly subjective. Some people might have some of these moving in different time frames, but this is how I label it and it kind of works for me. So your higher time frames are your 1 month, 1 year, 1 day. So what does that mean? It means that each candle or each bar, if you had a traditional candlestick chart like this, let's say you've got a red candle, that represents either 1 month, 1 week, 1 day. And if we go to the medium time frames and lower time frames, that's what that is kind of representing. So when you're obviously on a 1 week or 1 month, you're seeing a lot of years worth of data. You're seeing it all there, and you're seeing how much the market moved on each particular month or each particular week or each particular day. So if you've got a daily candle, you can probably see, depending on how big a screen is and all this other kind of stuff, you're going to be able to see a decent number of weeks, number of months, maybe even years, depending on what settings you've got it on, and seeing how each day is represented. So what's the higher the day, the lower the day, etc. But what this does is it starts to give you a picture of what the market is looking like to the people at the very top who are looking at the higher time frames, to the people who are moving money around on those time frames. And so you start to see, and so for example, let's say our daily looks like this. Daily chart, well, fine, maybe if we're looking very short term, it's quite down, but actually on a daily, it's looking like a little bit of an uptrend. And so you start to picture that and you start to note that down. So you say, right, the higher time frame is doing this, range bound, uptrend, downtrend, choppy, whatever it may be. We've come well off the highs, we're at the highs, we're at the lows. This is giving you a feel for the underlying strength or weakness in the asset, in the stock, in the currency pair, in the index, whatever it may be. And then you move to a medium time frame. So now we're kind of going down a level. So you've gone through the first level of filter, down to the next level. You go, okay, what is it looking like on that time frame? And for me, the medium time frames are your 4 hour, 2 hour, 1 hour. So you're going to then look and go, okay, how does it appear? Now, bearing in mind, you're getting the same information, but now what you're doing is almost like getting a magnifying glass. So rather than having one candle that represents a day before, now one candle represents, say, an hour. So of course you're getting many more candles in that 1 day, so you can't start to see, well, what actually happened in the day? Where did it go in the day? How was it trading? So you can start to now see, okay, let's have like a 5-day period, for example, all right, or a 10-day period. Okay, what actually really happened? Did we hit that bottom? Did we stay at the low very, very often before we pop back up? Because it won't get the information on a daily. All you see is the high print, the low print, the open print, the close print. You don't see what happened in the middle of the day. You don't see the fact that it kind of ripped to highs, literally just touched it and then completely collapsed. You don't see that information. So that's why we go down one more time frame or one more level to the medium time frames, and then we go one more if we want to. Now if we're swing trading, we might stop at the medium. We might say, okay, I've got enough information, I don't need to go add more noise, so to speak, so I'll stop at my medium, I'll make my trading decision from there. If you are day trading, or if you're a swing trader who likes to kind of adjust and adapt and really pinpoint the entry, you might go one more. in which case you go to the lower time frames, which to me are the 15 minutes, the 5 minutes, the 3 minutes, and the 1 minute chart. Now, of course, you can have others in there, like a 2 minute. Same with any of these. Some people use different things and play around with different settings, but that's broadly what we're looking at. So now we're looking at, say, a 5 minute. So each candle or bar representing 5 minutes worth of data. So you can see now we're getting many, many more candles and seeing much more data. Now, that might not be relevant if you're trading for a swing trading perspective. You can see now, why would you want to see what's happened in that hour? Doesn't really matter. If you're swing trading over multiple weeks, you don't really care so much. But if you're maybe day trading or swing trading over a few days, you know, getting that sweet spot, trying to find that little perfect entry. You never get a perfect entry, guys, get them from time to time, but try to find the best entry you can might need you or require you to go down that time frame, to go down into the 5 minutes and the 1 minute. So, you know, let's look at an example. You've got a trade here idea, you think, okay, I know I wouldn't mind, you know, going long on this market. So let's have a look and see what's going on. Now, if you went straight to a 5 minute, you might think that looks like death. You're like, oh, I don't like the look of that. That's really getting quite hammered. You know, how much lower can it go? I need to be a bit cautious trying to catch a falling knife here. You know, at least wait maybe for some double bottom or for some higher lows. Doesn't look so great. But now we start to kind of dial up and look at our daily. So our daily could start to look, we look at our daily, and let's say, for example, you know, we have a moving average. Let's say we've got a moving average just coming up here like this, and we're kind of moving into indicators a bit, but just as an example here, you know, you've got an uptrend, you've got a moving average, prices coming down to moving average, and maybe as well, we can see that we've got a little bit of support around here from before. So we might be thinking, all right, this is a pullback in a trend. We have had a bit of a choppy move, but it's still ultimately gone from here to here in whatever time frame we've been looking at here. So it's still doing okay, and it's pulling back a bit. Now, if we had any news or anything, we can start to maybe add that into our decision-making process if we want. That's caused this. Is it just technical? All right, so now this isn't theoretically a bad place to look to buy, right? We're not buying at highs, not chasing. It's pulling back. If we're using a moving average to make our trading decision as well, that's helping. There's some support there. All these things start to add up. So we go down to the time frame, the medium time frame. We look at the medium. We're going to, in this case, we're going to use an hour. Again, we could use any of these we wanted, but we use an hour for this example. So in reality, depending on, again, what settings we've got, how much screen space we're using, all this stuff, you know, we can, in theory, have a stupidly wide screen and have all the data in. But, you know, in real world terms, a 1 hour chart is probably going to give us that sort of data there. So it might give us from high to low, which is really quite interesting anyway, because we can see how it's behaving. As we'd expect, you know, it's ground down like this. And so we start to say, okay, you know, on an hourly, maybe we've got a downtrend channel here. So, all right, it's moved down quite a bit on the hourly, but it's kind of about to test the low of this bottom channel here, for example. We've just broken through this low here. We start to think about what's going on. And then we go down another time frame. So we go down to the lower time frames now. In this case, we'll use a 5 minute, and that's probably going to pinpoint, you know, that sort of section. So you notice how we're kind of widening, we're zooming in, we're zooming in, we're zooming in, and we're making a decision. So far we've said, okay, maybe a decent place to buy, pull back from an uptrend. Got to be careful, it's a little bit brisk that, but you know, it's a confluence here with our moving average and our support. Hourly's a downtrend channel, as we kind of expected with that. It's just broken through the prior low. Okay, now the 5 minute, how's a 5 minute look? Well, because we're looking at this little chunk here, it's basically gone up and it's gone down. So now the 5 minutes is a little bit more interesting, because let's say this is 1 day's worth of trade. Could be 5 minutes, you can get a little bit more than that, but let's just say it's 1 day worth of trade. This now is not such a bad chart, right? Because we have the open, we have the price has gone up and come down, and it's, even though we're sitting here, we could start to frame a trade from this and go, well, actually, you know what? I'm bullish based on the 1 day, and this is theoretical, guys, of course. I'm bullish based on the 1 day. Hourly, there's not much to talk about there. It's a downtrend, admittedly, so it's out of line, but this is the most important one. However, my 5 minute, maybe, because we've rallied and sold off again, maybe I don't want to buy yet, but perhaps I can start to frame a trade and say, all right, well, actually, you know what? If we cross back above that opening print, or whatever print we're using, if we're using say a currency pair, maybe it's the London close, or whether it's kind of the Asian open, or maybe we're using it based on some sort of data, whatever. The point is, if some sort of anchor point here, we can say, okay, well, if price perhaps goes back above there, then I might take a long. You know, I might look to take a long, and I might position my stop here. I might say, right, well, I'll take a long because actually then on the hourly, that price would be here, and on the daily would be just pushing back up here. So maybe that's not a bad way to do it. So, okay, again, all theoretical stuff and all just kind of here for examples, and we're just thinking about ideas off the top of our head here, but you can see how, you know, we're going up and down the charts, or going down the charts and maybe looking back up and seeing how would it affect this, etc. Just very quickly, if our daily chart was, let's say, the other way round, so it's real heavy downtrend, this might not be so great because ultimately the pressure from a higher time frame money is down. And even though, you know, we may be looking like an okay entry here, ultimately we might not want it because the daily chart is looking like a lot of pressure. We want to wait till at least that trend runs out of steam a bit before we start trying to accumulate stuff. But again, up to you, up to the way you trade, etc. But it's not a bad approach, top-down technical analysis, to start from the top, take a thesis, take a premise of what's happening, go down another time frame to your medium, go down again to your lower time frame, and then try to pinpoint that trade decision. It might actually be the case that, you know, you skim through some dailies on your currency pairs and your indices or your stocks, whatever, and they don't pass your criteria, in which case you don't waste your time doing any more analysis. But if they do, maybe you go down to the hourly, oh, it doesn't matter, you shrug some off. But when some that get through, all the way through the filtering process, if you like, you finally get to that lower time frame, and if you can pinpoint that entry, then you are aligning yourself, hopefully, across all the time frames. All right, guys, this video is sponsored by, description below. Go and check them out. See you in the next one. Take care. Bye-bye.